Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching your stocks this afternoon. Well, it's turning out to be a session which is quite stable for the markets. We have the Nifty, which is up around 82 odd points. The mid-cap index, which is outperforming, so up around 0.8% currently for the mid-cap index. Overall, stable days, stable global cues and an advanced decline ratio, which has been extremely positive from the get-go. So around 2,400 stocks advancing to around 1,400 stocks declining. Joining us this afternoon, Rajat Bose on the technicals and Parthiv Shah joining in on the fundamentals to answer all of your stock queries. Parthiv as well as Rajat, welcome to the show. Well, we'll get to Rajat in just a bit, but a lot happening in the market. And before we start talking about a lot of these stocks and the queries that we have, Parthiv, just wanted your view in terms of how you're probably approaching a lot of these metal names today, considering the upside that we are seeing on it.
Good afternoon, Ekta, Rajat, and our viewers. See, I think the metal names have bounced back well. One of the reasons being that one is expecting that China should stimulate its economy further because a lot of metals from China, especially in terms of the production, in terms of consumption, I think China commands almost 40 to 50% of a lot of ferrous and non-ferrous capacities globally. Not only that, I think in terms of the housing market, there are some green shoots over there. And probably one is expecting with the stimulus, I think the metal prices would be kind of reasonably well. And in India, I think a lot of frontline stocks, especially names like Tata Steel and even in the non-ferrous names like Hindalco, the managements are guiding in terms of the volume growth of no less than around 7 to 8%. And going ahead, I think with such volume growth and with new incremental capacities getting absorbed, I think we'll see a lot of operating leverage kick in. So we are upbeat on the metal space. No doubt, I think some of the valuations are looking a little rich. But selectively, I think for the next 3 to 5 years, with a lot of infrastructure push in the country, I think metals, both ferrous and non-ferrous, should do well.
Okay, all right. All right, so that's the view coming in on the entire metal space. Just want to point out JSW Steel, Tata Steel, Hindalco, all of these stocks are up anywhere between 2.5 to 3 odd %. Also, Cipla is doing well today. So from the pharmaceutical space, that stock has become the top gain on the Nifty, almost up around 4 odd %. Remember that on a month-to-date basis is down around 6 odd %. But now we're seeing a little bit of a pullback coming in for Cipla. So that stock is doing well. The other stocks which seem to be showing some amount of momentum on the upside is Power Grid, which is up 2 odd %, NTPC, which is up around 1.5% as well. And a couple of these banks such as Kotak, ONGC, all of these stocks are managing to perform well. Tata Consumer Products is sulking today post its numbers, so that stock is down around 4.6%. TCS also having a bit of a bad day, so that stock along with Infosys is lower. But nonetheless, we have a lot of queries to watch out for. Let's get to the first one. Manju Khanna writes to us from Pune. She holds 20 shares of ONGC, which she's bought at around 200 odd rupees. She's sitting on a profit on this one. She's asking, she wants to know what to do, whether she should book her profits or stay invested. Parthiv, what would you recommend on ONGC? She's sitting on a profit at this point. Would you recommend taking some off the table?
See, I'm very tempted to suggest a hold on ONGC. One of the primary reasons is the current valuations. This is, I think, globally, if you see, one of the cheapest upstream companies. No doubt it does get a discount due to the fact that it's a government-owned PSU. But nonetheless, I think what we are excited about is a lot of positive commentary from the management in terms of upping the production over the next 3 to 4 years, and production not only in the upstream oil space, but even the gas segment. And not only that, I think it has seen reasonably good realizations, despite the fact that there was this windfall tax. But I think our sense is that currently the valuations at an EV EBITDA multiple of only 4 and the price to earning multiple of around 7. In terms of forward, it is quoting at around 6 times. And looking at the fact that there's a lot of geopolitical tensions helping the oil market, Brent has stayed upwards of $85, which is always a good thing for ONGC. A lot of people talk about the fact that even if the oil were to go a lot higher, that also sometimes does not bode well for a company like ONGC, because then the government takes a bigger share. So at $85, $90, I think it's in a sweet spot for ONGC. And if in the next 3 years the production also goes up, there is value to be made, and there's a 4.5% sort of a juicy dividend yield to use with until the investor stays invested.
Okay, all right. Well, it's been a good performer. It's up around 70 odd % plus in the past 12 months. So that's the kind of return that ONGC has given to investors. But Ramesh Jain now writes to us from Chandigarh, who he holds 30 shares of Punjab National Bank, which he's bought at around 50 odd rupees. He's asking if he can buy more shares at these current levels. Well, he's done very well in terms of his investment and he's held on to it. But what would you recommend, say from a longer term perspective, a 3-year perspective, any recommendations on this one, Parthiv?
See, Ekta, I do recollect that, 4 or 5 years ago, I think these were the type of stocks that nobody was interested into. And, there was a fraud, there was a massive cleanup going on, a lot of loan write-offs taking place. And, these stocks stayed like under one price to book multiple. Rather, they were quoting at 0.6, 0.65 price to book multiple for donkey years. Post which I think we have seen a massive cleanup. And now all these banks, especially a lot of these frontline PSU banks, are looking very progressively to increase their share of loans, and we are seeing the advances grow by 12 to 13%. I think, contrary to what a lot of private sector banks have struggled in terms of generating CASA and deposits, I think a lot of PSU banks have held on to their CASAs extremely well. So the cost of the funds for them have stayed well. So that's why we are seeing a decent NIMs for a lot of these PNBs of the world. And our sense is that going ahead, I think still in terms of comparison with its peers in the PSU space, where a lot of such banks are quoting at 1.8, 1.7 times price to book multiple, PNB still quoting at 1.25 times price to book multiple, which I believe for such a large size, second largest PSU bank, I think it's reasonable. So I would suggest a hold for the next 2-3 years.
Okay, all right. That's on Punjab National Bank. Sama Sai Shiva writes to us from Mumbai, who has 150 shares of IREDA, which is bought at around 67 odd rupees, and is asking if we can buy more shares at these current levels. Well, complete outperformer. What would your recommendation be on IREDA, Parthiv?
Ekta, there's no doubt that this existing government going ahead is very, very upbeat in terms of investments in the renewable energy space. And when we are talking of targets of around 500 gigawatts by 2030, by 2032, I think we are talking of huge, huge investments even from the current levels. We are almost talking of doubling, more than doubling of the renewable energy space. And this is where IREDA comes into picture, because I think it's a frontline name in terms of disbursing loans to a lot of such projects. And I remember that when the IPO had come, the book size was around 45,000 crores, and currently sitting on upwards of 60,000 crores. And no doubt, I think in the next 2 to 3 years, we might see this company managing a book size of anywhere between 1.5 to 2 lakh crores. But the only concern out here is currently it's quoting at 5.5 times price to book multiple. This is extremely pricey for a PSU lender, and that is where I think we would suggest a wait, because there is all possibility that government might come going ahead and sell some stake at such juicy valuations. So I would not suggest a new entry here, and somebody having this stock at lower valuations, I think, should also consider an exit.
Okay, all right. So that is basically on IREDA. Remember that it had come out with its numbers and it logged its highest ever net profit in FY24. And the stock had reacted very positively to its numbers on that day. So good amount of impressive Q4 performance as well as FY24 performance as well for IREDA. Anything else that you would like in this space that you would recommend, Parthiv?
See, Ekta, if you look at some of the peers like REC, PFC, and especially REC, the valuations are a lot more attractive than IREDA. And more importantly, I think what we find is that REC has tweaked a lot of its book into this renewable energy lending space. And going ahead, I think they have steeper targets to lend there vis-a-vis the old traditional discom lending. And that is where I think probably the markets are upbeat that, a company like REC can have more scope of growing its book with a lot better net interest margin. And especially the valuations at around 2.2 times price to book multiple are less than half than that of what IREDA is quoting at. So I think the investor might even consider switching from IREDA into REC at this juncture.
Okay, all right. Well, let's get in Sunny Ahuja's query now. He writes to us from Delhi. He holds 500 shares of HCL Tech at 1530. Wants to know what to do, whether he should hold or sell this particular counter. Well, on HCL Tech, what is your recommendation? And I think we've got Rajat on the phone as well. There was some network issues there. Rajat, if he could come to you on this one, HCL Tech, what would you recommend? Sitting on a loss at this point, Buy price 1530.
See, HCL Tech is actually showing a lot of weakness. If it were to fall below 1414, which is the 200-day exponential moving average, then it can go further down. So the investors should actually keep a stop loss around, say, 1400. But if it were to go below that level, then definitely one should exit HCL Tech.
Okay, all right. And Parthiv, what about you?
See, if you see HCL Tech since the last few months has corrected from its highs of around almost 1700 levels to current levels of 1486. And more importantly, I think this is a weakness that is set in because of the past commentary and especially a lot of total contract values not getting converted into execution and in terms of constant currency growth. HCL Tech, I think, has a good track record of inorganic growth. And our sense is like what TCS and Infosys managements have guided for, that FY25 will be a lot better in terms of constant currency growth vis-a-vis what we witnessed in FY24. I think a lot of negativity seems to be already factored in. And even if we look at the 5-year valuation band, HCL Technologies, I think currently is quoting at an average valuation of the 5-year band, which is, I think, always a good entry point. So only if the investor has a long-term view for the next 2 to 3 years, I believe that HCL Tech out here is a good investment buy, and one can hold on to a position if one has.
Okay, all right. HCL Tech is a good investment buy. So that's the word which is coming in. It will be reporting its numbers soon as well. On that note, we in fact can take a break with the news that the markets are extremely stable and we have the advanced decline ratio, which is positive as well. We'll take a break and we'll answer more of those stock queries that all of you all have on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Rajat Bose as well as Parthiv Shah to answer all of your stock queries. Well, before we move ahead, just want to point out that HUL is going to be releasing its numbers in the next 1.5 or 2 hours. And that stock is a little lower ahead of it. So it's just about lower by around 0.2% at this point in time. Remember, it has lost 15% on a year-to-date basis. And compare that to ITC, which is down around 7% on a year-to-date basis. So there is a bit of a funk that HUL has been in this year. And let's see what these numbers would do to probably, revive it a little bit. But nonetheless, let's get in another query now. We have Ram, who writes to us from Chennai with an investment question. He's asking if he can invest in either IDFC or IDFC First Bank stock. He adds if it is the right time to invest in these stocks as well. Well, Parthiv, over to you on this one.
Oh, yes, Ekta. I think, IDFC First Bank is something that we do like for the long term. The bank had guidance 1.0, where I think it had a lot of challenges in terms of the mergers, post which now the bank is guiding for the guidance 2.0, where they're talking about targets up to FY29. And if you look in terms of the targets that they have, they're talking about, the branch expansion to the tune of at a CAGR of around 20% from the current levels. They're talking about the deposit growth, the CASA growth to the tune of around 22 to 25%. More importantly, I think what we like about the fact is that the asset growth, the loans and advances, they're talking about a growth of anywhere between 20 to 22%. I think this is very healthy because formally, I think the bank had guided for around 25%, and that is what they've delivered so far. And sometimes when the bank overgrows, I think in terms of the size, there's always skepticism of what sort of asset it is building into. So I think this is a very reasonable guidance. And looking at this guidance and current valuation of around 1.8 times price to book multiple, our sense is that this can be a fantastic opportunity to invest for investors over the next 3 to 5 years. I think the franchise is excellent. The management pedigree is also very good, and I think they're building a fantastic bank franchise.
Okay, all right. And Rajat, what about you on both these banks? What would your recommendation be in terms of the technicals?
Regarding IDFC First Bank, I would say that one can invest at current levels, and if one is holding, then the stop loss should be placed below 75 and continue to carry on because it is now trying to get past its intermediate trend line, which is coming from the high of 100.70, the all-time high for IDFC First Bank. And even IDFC, from a technical point of view, is also signaling that it can still move up further. Maybe you will see 145 to 150 going forward. So both are buy candidates. So it's no problem as such.
Okay, all right. Both are buy candidates. Amit now writes to us from Mumbai, holds 600 shares of Tata Steel, which is bought at 115, and wants to know what to do, whether to hold or sell this particular counter. So Tata Steel is the one, and in fact it's doing well today along with a lot of these other metal stocks, and the buy price is 115, so good buy price also and good profitability there. Rajat, do you see further upside on Tata Steel?
Yeah, possibility has it that it can still move up further. And if it were to cross 170, then there is a likelihood of it's going up to, say, 185, 189 kind of levels. But if somebody is already invested, then the stop loss should be placed below. If he is a short-term, he or she is a short-term investor, then you should place a stop loss at 155, and long-term investors should keep a stop loss at 138. But Tata Steel can still go further up despite the fact that it has been rising since November.
Okay, and what about you, Parthiv? What would you recommend on Tata Steel? And also, we already spoke about the metal SPAC and your view on it, but nonetheless, Tata Steel in specific.
We are definitely very upbeat on Tata Steel because I think they're guided for a 40 million ton capacity by 2029, 2030, which means they're almost more than doubling their current capacity. And looking at the growth that India is giving in terms of infrastructure, I think steel as a sector should grow by at least 7 to 8% in terms of the volume. And more importantly, I think there's a fantastic backward integration for a company like Tata Steel. They have a lot of iron ore, and 25% of their coking coal they are able to meet with their capital consumption, and a lot of inorganic acquisitions that they have made. I think now it's getting relatively easy for them to scale those up. The Indian balance sheet is looking, I think, extremely strong and dwarfing the European balance sheet, which was always the cause of concern for Tata Steel. So our sense is that I think going ahead, almost 80 to 85% of EBITDA and revenue run rate should come from only the Indian operations, which will dwarf the European operations and help Tata Steel to re-rate from.
Okay, all right. Positive on Tata Steel. That's the view coming in. Swati now writes to us from Mumbai, holds 20 shares of M&M Financial at 150, wants to know what to do, whether to stay invested or not. Sitting on a profit at this point in time, good buy price, but what would you recommend given all of the news of the fraud and the delay in the Q4 numbers, Parthiv?
Somehow, I think looking at the M&M group, I think overall the pedigree is so strong. But this one company, I think since many years we've been tracking, I think the way it's been managed, I think is a lot of question mark. And I think that is the key reason why M&M Financial over the last so many years has failed to create proper shareholder value as compared to a lot of its peers, which have executed a lot better and done extremely well. And I think another big concern for M&M Financial is, again, the rural stress right now that one is witnessing. I think one is only expecting that by next year, hoping for the fact that this year, if the monsoon trend is extremely good, probably we'll see some green shoots for a company like M&M Financial. But otherwise, I think, especially with the recent fraud news, I think it does not bode well. So I think I would suggest an exit out here and avoid this particular company.
Okay, and what about you, Rajat? How would you approach a stock such as M&M Financial? There's so much of volatility in terms of the news surrounding it, or the stock is corrected. In such kind of situations, what would your recommendation be?
Well, yesterday, the kind of movement that happened, it showed a signal that probably whatever has to be discounted has already been discounted. But today, again, it has started coming down. That's a worrying sign. So I would side with Parthiv and say that since the investor is already in profit and it's a handsome profit, even at current levels, one should exit.
Okay, even at current levels, one should probably exit. That's the view coming in on M&M Financial. Kritika Dua now writes to us from New Delhi. She holds 10 shares of State Bank of India, which she's bought at around 300 odd rupees. So good profit there. Long-term investor, and is asking if she can buy more shares of SBI. Well, it's a good buy price. Do you think that there's further upside on State Bank of India? It's still to release its Q4 numbers, but in the near term at least, Parthiv, what would your recommendation be on SBI, and maybe from a 1 to 2 year horizon as well?
See, one good thing is that last quarter, despite one blip of higher slippages, I think the market has not really reacted very negatively, and SBI is still, I think, doing extremely well. Our sense is that I think now this bank is at a very good run rate of generating a quarterly profit of anywhere between 13,000 to 15,000 crores. And probably, I think they have one of the finest balance sheet quality in many, many years. No doubt, I think looking at its historical valuations, I think current valuations are a little steep, but I think the way they are growing, and more importantly, I think the bank is innovating extremely well. They are focusing a lot on digitization. We have seen new ad campaigns, and I think they are in the race to garner more and more CASA and giving tough run for the money for a lot of their like private sector peers. So if the investors holding such low valuations, I think definitely it makes sense to hold, because this is a bank which has all the potential in ingredients. If it is managed the way it has been managed since last couple of years, I think in the next 5 years this bank can double from.
Okay, all right, that's on SBI. Rajat, interestingly, SBI has done well year to date as compared to the bank nifty. Do you expect this outperformance to continue?
If it manages to get past 805, then there could be further upside. Otherwise, there would be some profit taking around these levels. But any investor who has already purchased it should put a stop loss below 725 and continue to hold on.
Okay, well, talking about the financial space, we have the Equitas SFB numbers on your screen. The NII has come in lower than expectations. It's up around 11% on a year-on-year basis. That's probably where the disappointment stems from, considering that the profit is in line with estimates at around 207 odd crores. So bang in line with our expectations. So the NII is probably where there's a little bit of a disappointment which has come through. Well, on that note, that's all the time that we have on the show. But do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell up next.